Back in 2008, the world's economy basically stared into the abyss. It was the biggest, most terrifying financial meltdown since the Great Depression. And you know what? We're still feeling the aftershocks today. So what on earth happened?
And that is a huge question, right? It's something economists are still arguing about. How could a problem with housing in America end up causing a global economic heart attack? To figure that out, we've got to rewind.
So, if you look at the official books, they'll tell you the Great Recession ran from late 2007 to mid-2009. But let's be real, that's just a date on a calendar. For millions and millions of people, the hurt, the struggle, that went on for years longer.
All right, so let's get into the causes. A catastrophe this big doesn't just happen because of one thing. It's more like a recipe for disaster. A bunch of really shaky ingredients were being mixed together for years, and eventually the whole thing was just bound to explode.
So what were these ingredients? Well, there are three big ones. First up, you've got the U.S. housing bubble. I mean, prices were just going through the roof, way beyond what they were actually worth. Then, you have these incredibly complicated and super risky financial products. Basically, Wall Street was taking bad mortgages, bundling them up, and slapping a safe investment label on them. And the third ingredient? The referees, the government regulators, were kind of asleep at the wheel, not keeping up with this crazy new game.
And a lot of this risk was bubbling up in a place people weren't really watching. The shadow banking system. Sounds kind of spooky, right? It was basically investment banks and other firms that were doing all the things normal banks do. Lending money, creating credit, but they were doing it without any of the normal rules or safety nets.
Okay, so here's why that's a huge deal. Your regular bank? It's regulated. Your money is insured by the government. The shadow system? Nope. No insurance, barely any rules. But here's the kicker. They were playing the exact same risky game as traditional banks, borrowing money for short periods and lending it out for long periods, like for mortgages. It's like walking a tightrope with no safety net. As long as everything's calm, it's fine. But the second people get scared and want their money back, now, the whole thing collapses.
So who's to blame? Even now, experts don't all agree. The official government report basically said the regulators failed and Wall Street got way too greedy. But some dissenters said, hold on, what about government policies that pushed for easy home loans? And then others just point to the simple fact that everyday people were buried in more debt than ever before. The real answer? It's probably a messy combination of all of it. So you've got this whole economic house of cards just waiting for a breeze to knock it over. And that breeze, that final trigger that started the whole avalanche, it was the U.S. housing market finally cracking. And it didn't happen overnight. It started kind of slow. Back in 2006, house prices started to dip. Then in 2007, a whole bunch of people with those risky subprime mortgages couldn't pay their bills. Suddenly, this American problem becomes a British problem, causing a bank run over in the UK. But the day the world changed, the day the floor fell out, was September 15, 2008. That's when Lehman Brothers, a giant of Wall Street, went belly up.
Look, Lehman Brothers collapsing wasn't just another bad headline. No, this was the match that lit the dynamite. It unleashed a wave of pure panic across the entire global financial system. All of a sudden, nobody trusted anybody and the whole machine just seized up.
Panic. That's really the only word for it. What we saw was basically a global bank run, but on a massive scale. It wasn't you and me lining up outside our bank. It was the banks themselves panicking about each other. They slammed the brakes on lending to one another, and just like that, credit, the thing that keeps our entire economy moving, vanished. It just stopped.
And the effect on regular people? Oh, it was just devastating. In the U.S., the wealth of the typical family dropped by 35%. Just pause and think about that. That's not just a statistic. That's people's 401ks, their savings for college, the equity in their homes, just wiped out.
The grand total? An absolutely mind-boggling $11.5 trillion in household wealth. Gone. Poof. A loss of personal wealth that hadn't been seen in, generations.
And this fire spread fast. This wasn't just an American problem anymore. Pretty much every major developed country on Earth got dragged down into a deep, nasty recession. Global trade, it fell off a cliff. Unemployment rates skyrocketed everywhere. Now, what's interesting is that a few places like China, India, and Australia, they managed to dodge the worst of it and actually kept growing.
So the world is in a free fall. To stop it, governments and central banks had to pull out all the stops, throwing everything they had at the problem. But even after they stopped the bleeding, the world was facing a long, slow, and really painful climb back up.
The response basically came in two flavors. First, you had governments using fiscal policy. That's a fancy way of saying they spent a ton of money on stimulus packages to try and create jobs. Then you had the central banks using monetary policy. They were the ones bailing out the big banks and cutting interest rates down to basically zero, desperately trying to get money moving through the system again.
And this timeline right here, it really shows you what a slog that recovery was. I mean, the recession was officially over in 2009, but it took until 2014, 5 more years, just to get back the number of jobs we had before the crash, and another 2 years after that until 2016 for the unemployment rate to get back to normal. For so many people, it felt like a lost decade.
So when you look back at all of it, the chaos, the massive bailouts, that long, slow recovery, it leaves you with a really big question, doesn't it? The whole thing showed us just how interconnected and, honestly, how fragile our global system really is. And maybe the biggest lesson, the one that might keep you up at night, is this. After all that, are we really any safer now?